This could be us, but I use only a fixed risk to reward ratio. Hello traders and welcome to a new strategy video. Today me and Divergence will backtest the strategy that actually Alex have developed, so all credits to him. And with no more further ado, I will show you exactly how do we have the entries, and after that we will do a quick backtesting session because I was really impressed regarding the results that Alex got using this strategy. So let's see what do we actually need for that. First of all, as you can see, we will use more indicators than we used to do. First of all, we are going to use the stochastic RSI. You have to select here from indicators to be the stochastic RSI, not only the basic stochastic. It's this one here. Okay, after that we will need the view up. It's the black line here. And more than that, we will use 3 EMAs, the 13 EMA, the 21 EMA and the 55 EMA. So first of all, in order for us to know in what zone we are, we have to look at the position of the price towards the view up. So here the price is above the view up, so we are going to be interested only in buy positions in this zone. Alright, I will present you now the conditions for a buy, and after that we will go for conditions for a sell. Alright, so after that, after we know the position of the price towards the view up, we have to look at the position of the smaller EMAs. So you can see here that the EMAs are crossed nicely to the upside, and we have to wait for a pullback of the price from the 21 EMA or from the 55 EMA. You have to just look at the price action, and you will see the rejection, and there we are going to have an entry. But in order for us to have a confirmed entry, we have to have the stochastic RSI below the 20 line. So all the conditions are met, and now here we have to wait for a nice pullback from the EMAs in order to be involved into a buy position. But as you can see, the smaller EMA couldn't sustain our price. But finally we can see here that the price made a rejection from the 55 EMA, and the stochastic is correctly crossed to the upside. So now we are going to place here a long position, and in this case here our stop loss will be a few points below the view up indicator. And for the target, for the moment, I am going to backtest this strategy using a fixed risk to reward ratio, so I'm going to target a 2:1. And after some refinements, I may be going for targets like zones or things like that. And as you can see here, all the conditions were met. We were triggered into this position, and the 2:1 was hit. Alright, now let's see an example for a sell position. So first of all, we have to wait in this case for the price to be for sure closed below the view up in order to be involved into a sell position. After that, we can see that the smaller EMAs are crossed to the downside, and the stochastic is in the overbought zone, so it's above the 80 line. Alright, now we have to wait for a pullback from this zone, but this is not a valid pullback because you can see here a strong rejection from the downside. Alright, but now this is the candle that at the closing of this candle we are going to set our sell position. So we are going to place the short at the closing of this candle, and of course the stop loss will be a few points above the view up. And again, now I'm going to target only 2:1 because this is how I firstly want to backtest this strategy, and after that again maybe I'm going to add some refinements. Alright, And finally our target was hit, the 2 to 1 was hit, but I can see here that the price was targeting maybe a lower zone. Exactly, the price was actually trying to come in this zone right here, where it just got a rejection. So now that we have all the conditions for buys and sells, I'm going to make a quick backtesting session. Let's see what do we have here. So I am on the 5th of the April, and I'm going to just scroll and see what do we have. So first of all, you can see here that the price made a rejection from the view up, but the smaller EMAs are not crossed correctly, so they are crossed to the upside, and also the stochastic RSI is not in the correct zone. So if we want to place a sell position, we have to wait for the stochastic RSI, for the diagram to come to the 80 zone of the stochastic RSI. So no trades here. Now, being below the view up, we have actually to wait for the stochastic to come above the 80 zone, and after that we may get a position. Alright, we can see here some rejections, but nothing clear, so no trades until now. But not right after this candle, we are not going to place a position, sorry, but Divergence got bored. Alright, this is not a candle ideal for opening a position, because you can see here some rejections from the upside, so we have to wait for a clear candle in order to be involved into a sell position. Alright, now in this case we are going to set our short. And in this case, our stop loss will be just above the smaller EMAs, but not above the view up. So our stop loss will be somewhere around here, above the smaller EMAs, and the target will be again a 2 to 1, which in this case it's a great target, because we can see here that there is a zone that may not be broken. Exactly as you can see here, this candle made a retouch in this zone, and after that had a rejection, but our 2 to 1 was hit, and I will mark here the result. So we will add plus 1% for this one, because I am backtesting this strategy considering that I would use 0.5% risk per trade. Alright, let's go next. So exactly as I previously told you, I can see that this strategy would work better if we would use as targets zones, but this will be the case for another video. Alright, I can see now that the price is trying to establish above the view up, so now we are in the buy zone. And we have to basically wait for a pullback into the EMAs and for the stochastic to come below the 20 line. Alright, even if the stochastic would have been now in the right zone, we are never taking rejections and positions after rejections made into the 13 EMA. So we consider only the rejections from the 21 EMA and from the 55 EMA. We are using the 13 EMA only to see the cross of the EMAs and to actually to know the trend of the market. Alright, in this case it would be a great position, but most of the times here are made most of the fake outs, so no problem with that. Alright, I can see some strong moves, but they are based on this US market news, so we have to know and to expect this kind of moves on the US market openings. Alright, for the moment we have nothing, because as you can see, the stochastic was not in the right place. Okay, and let's see if we finally get any entry here. Alright, so the stochastic is in the right place, and we have to wait for a nice pullback from the EMAs. This is still not a nice pullback because there is a strong rejection from the downside. All right, one more candle, but it may be too late, because you can see here that the stochastic is already cooling down, but we are going to just take this position for the sake of the backtesting in order to see how this strategy actually works. All right, so let's consider that we took that late entry there. All right, and actually we are involved into a range now. Hopefully we are still in the position, but I can see that the price cannot go below this zone here. Alright, but actually we are still in this position and we have to wait until maybe our take profit will be hit. And finally our signal was correct and our 2-to-1 was hit. So another plus 1% for this position here. Alright, I will mark it here, and we are going to take one more position, and after that I will call it a video. Alright, so now we are actually in the Asian session. The price started to establish above the view up. If you saw this move of the view up, this happened because view up is resetting every midnight, so this is why it made this gap here. Alright, now we have to wait for a clear signal for us in order to be involved into a buy position, this time because we are above the EMAs, above the view up. Alright, and this should be a borderline buy position because as you can see here, the stochastic is not yet in the right place, and I would personally wait for a deeper stochastic move. So now the stochastic is finally in the right place below the 20 EMA, below the 20 line, sorry. So after this candle here, we are going to take a buy position. Alright, this is our buy position, and this time, due to the fact that all the EMAs are almost in the same place, we are going to set the stop loss below the 55 EMA. So you have to just follow the trend, and this is how we are setting our stop losses. Alright, I am not really sure if this position will be good, because I can see here that this is a ranging zone, a kind of ascending channel, so I expect for this to be a loss, of course. But it's fine, we've got a minus 0.5% for this position here. And overall, on the 3 trades that we took here, we've got 2 winning trades of plus 1% and this minus 0.5%. So overall, in from 5 to 6 April, in 2 days, using 0.5 risk percent per trade, we managed to be plus 1.5% on the account, which is a great result. Alright. So now I will call it a video. Thank you all for watching, and if you want more extensive explanation of this strategy, please write down in comments, because Alex for sure will come with some refinements, because he is working on some refinements using price action, and it's really interesting. But until then, thank you all for watching, thank you all for supporting our channel, see you in our next videos, and of course until then, trade safe and trust the process.